suggesting that ISM is going to go lower, the economy slows down, bond yields should fall. If there's a quicker resolution to the Ukraine war, then we will see commodity prices come off, because if the Russians make an agreement that sort of appeases Europe and the US, everyone kind of walks away and commodity prices fall for now. I mean, they can go up over time because of other issues. And so in which case it takes the inflationary pressures off. So I kind of like the bond market. I'm looking at the dollar, which is screaming higher. The dollar's a global wrecking ball, as I've called it before. If it breaks out of the range it's been in for the last 5 or 6 years, so it kind of gets over 105 in the DXY, that's a big problem for the world. We're already seeing countries like Sri Lanka, Nigeria, having dollar shortages. If it keeps going up, you'll have more dollar shortages. Obviously, the global lending markets are slowing down. We've seen stories about a liquidity crisis brewing. We saw the issues within some of the metals exchanges, the LME, where people couldn't pay margin. These things are the creaking seams at the periphery. You know, when you've got an over-leveraged system, you're tightening monetary conditions in an over-leveraged system. So it's a really fascinating macro scenario. I don't know how it fully plays out, but we all need to pay attention. So that's the macro traditional side. The crypto side is...
Right, let me jump in and just say, first of all, extremely well said, extremely well framed for people who are trying to get a sense of the big picture. You know, Raoul, you and I usually do the digital version of television. Tonight, we're doing the digital version of radio. But I want you to know, Raoul, I'm going to be live tweeting out some of these charts that you're mentioning. I just tweeted the 2s10s curve, but I wanted you to speak to a particular chart that I'm going to live tweet right now, because I think this is an incredibly powerful image. This is what you've called the chart of truth. This is the long-term UST 10-year yield. I've just tweeted it at my account at Ash Bennington, and I think Real Vision is going to post this to the top of this Twitter Spaces. Give us a sense of what this chart is, because it's really extraordinary. If you look down there at that x-axis and you see this chart dating back about 40 years with the standard deviation bars on, give us a sense of what this chart is, Raoul, and why it's so important.
So the first chart that you posted on Twitter was actually the yield curve, and it shows it generally gets to 300 basis points when it's maximum steepness, and then it goes to kind of negative 50, maybe up to negative 100. And that big swing is the business cycle. And then if you notice the recent peak in yields, and it's gone lower since this chart, it's like in the yield curve, it's like, okay, we've got a truncated cycle. Mark that down as macro, very interesting. So then the next phase from that is, okay, what about that chart of truth? What does that say? So that tells you that bond yields over an extended period of time have been falling.
Yeah.
That is driven provably, and I can prove this and have written about it, predominantly by demographics. So if you think about it, is when the entire baby boom generation was in there, hit 30 years old, they start getting to peak consumption age. So that's where the millennials are now. But so they get peak consumption, peak investment. So what happened is everyone had bought their first house, car, suit, tie, table, chair, everything. And those things caused a massive demand shock for the world. There were supply shocks around oil around that time, a bunch of things. And that was the largest demand shock the world has ever seen, hence why we had the largest inflation the world has ever seen. Those people start investing as well. So we start to see the stock market, which got down to a P of 7 or 8, start its enormous super cycle higher as these people went through the workforce. So as people get older, they have more savings. That tends to lower bond yields. More demand for a good raises the prices. The price of bonds going up means the yields go down. That's one thing. The other thing that happened was that is at the same time, wage growth stopped going up. When you put a record number of people into the labor force at the same time, there's a competition for wages. So real wages in the United States have barely risen since about 1974. So these people sold the American dream, go out, and they want to consume as they've been told. The 1950s was in their rearview mirror, and they want that. They want that world of fridges and TVs and cars and houses that they saw on TV. So what they do is credit. So we then start building up the world's largest credit bubble, which is the US and the global one. And it's absolutely gigantic. No country in the history of the world has ever had this much debt as a percentage of GDP. And I'm talking about total debt now, not just household debt or government debt. So once you've got a lot of debt, if you raise prices on somebody with a lot of debt, or you have an economic slowdown, what happens is it reinforces that slowdown. And so that's why every cycle has had a lower peak in yields, because yields and inflation don't go up as much because of the demand destruction driven by the debt. So demographics and debt have created that incredible dynamic where yields just keep falling and falling and falling. Now, it's not just the US. It's provable in Japan and Europe and any other country that has an aging population. So this is how it works. Now, everyone bleats and moans about interest rates being so low, but generally over the history of the last 500 years, 10-year yields have probably been about 1%, 2%. So it's not wildly away from where the world used to be. People are just very backward looking at the world of the 1980s. So that's why that chart of truth works. And every time you get to the top, it's basically saying yields are too high for people who are too indebted and getting older every day and therefore spending less money. So GDP growth has fallen in conjunction with that. Labor force participation rate has fallen with that. Now, there's a fantastic video on YouTube where I talk for 2.5 hours about this entire why we got here reason that's definitely worth checking out. I think, I can't remember what it's called. It's with myself and Robert Breedlove.
Yeah, fantastic. Raoul, one of the fun things about doing these Twitter spaces is just how interactive they are. As soon as I tweeted the chart of truth, the long-term 10-year yield chart, the first question that popped up in my feed immediately was, what does Raoul think about what's happening in TLT? I'm about to tweet right now that chart. Tell us about this chart. What are we looking at? This is a 5-year TLT chart.
So the TLT is just an ETF of 20-year bond yields, roughly, or 20-year bonds. And what it shows you is that the market has been potentially consolidating. Now, inflationistas will tell you, oh my God, it's topping out, and this is a huge pattern, and yields are going to the moon. Well, I don't think the economy can take yields to the moon for the reasons I said, and the economy would implode, and inflation implodes with it, and probably goes to deflation. So I doubt that that is a massive top pattern, and therefore the probability, knowing what we know about demographics, debt, the chart of truth, is that this looks like it's a wedge pattern or a pennant, which is my favorite pattern. I find that these tend to play out extremely well. And it says we're very close to the bottom of the range of the flag. So here you have a great risk reward in the fact that should it break that bottom line, and don't assume that that bottom line is perfect, it's actually not perfectly drawn on the chart there, but let's assume that somewhere around 130, if it breaks that meaningfully and stays there, then something has significantly changed in the bond market. Well, guess what? That's the same as the chart of truth at around 225. It could peak above it. We've seen that in the past, but over time, it shouldn't. So therefore, what it's telling me is we've got a slowing economy, we've got an uncertain world, we've got peak inflation fears. We might see the inflation numbers go up, but the forward-looking inflation should be falling over time. Therefore, the risk reward in the TLT is to the upside. And you can further hedge that risk and define the risk reward by buying call options. You can buy call options, so you can only lose the premium. So you can actually put a small amount in, let's say 1% of your portfolio. You get it wrong, you lose 1%. Get it right, you can make maybe 5 times your money or so. It's not the raciest bet in the world, but it's a pretty good bet. I've been looking at like the September 145 calls, stuff like that, with the TLT currently at 134. It's a bit of a racy bet in terms of the fact that, that's low delta, meaning the probability of it happening is relatively low. But with the work that I've done, I think it's a decent risk reward.
Yeah. And we should probably say, if you're looking at that TLT chart, that moves in direct proportion to bond price, obviously opposite of bond yields. So when you're looking at the TLT chart, and the price deterioration, that pennant pattern you're seeing is the flip, the inverse of what you would see if you looked at 20-year Treasury yields. Did I say that right? I think I said that right.
Yeah, that's right.
So, Raoul, any other points you want to make on, because I know you're eager to move on to what's happening in the digital asset space. Anything else you want to cover in geopolitics, macro, or markets?
Yeah, I do think that this step back from the noise on Twitter and everybody screaming and shouting at each other is, okay, what are the trends that come out of this, like COVID, right? What were the big trends? Now, I know we've seen an unwind of some of the COVID trends, but the digitization trend, the work from home trend, and a whole bunch of things will continue. The one that I think is going to come out of this is the ESG trend. And I think this accelerates it because Europe cannot rely on other nations for its energy needs. And I think that's vital to understand. We have this period in the middle where they don't have a choice because green takes time to scale. And the technology is not there to do it enough. That is with nuclear. They will probably have to get to nuclear, which everybody's been talking about, from Josh Wolf to Mark Andreessen. That has to happen. Nuclear technology is far superior than the 50-year-old power stations we've got that's in existence. So I think that the green energy revolution continues. And again, I don't like the fact that people take this as some philosophical argument against God knows what. Freedom. We must be able to choose to burn fossil fuels. I don't give a fuck about that. What I care about is, what is technology going to disrupt? And it's going to disrupt energy over time. Can it do it at scale yet? Yeah. Can it replace oil? Not a chance. But over time, we will see a massive amount of ongoing investment encouraged by government. So stuff like the EU ETS carbon credits or the KRBN, I just think are great investments, and they got smashed because a bunch of hedge funds liquidated to pay margin calls. A bunch of Russian traders got out. It got smashed, but I do not see the Europeans saying, you know what, we're going to walk away from our ESG. They're going to say, we need security, and therefore we need to produce our own energy. So I think that's a really important point to this. The other big point that happened over the last week was the understanding. The reason I got into crypto back in 2012, when I started looking at Bitcoin and first invested in 2013, was what happened in Cyprus. I was living in Spain. The whole of Europe almost went bust. Everybody almost defaulted on their debts. Greece and Cyprus had a full banking crisis. Spain got bloody close until the ECB forced 18 billion euros on them over one weekend. We would have lost the banks. I had to buy a generator, food, all of that kind of stuff, because I thought we were going to lose the banks. But what happened in Cyprus was the most important part. In Cyprus, they bailed in the banks, which meant that everybody with the ECB guarantees up to €100,000 of deposits, but everything over 100,000 euros was basically taken by the bank to pay its debts. So you were, in fact, even though you were depositing, you were in fact a creditor. And you got fucked. Now, that was a shocking realization to me, is that, okay, your money is not your money. That's why I got into crypto. And then we hadn't seen much of that for a while. And then suddenly Canada and its taking of the money from the truckers, or attempted taking the money of the truckers. And then a sovereign nation like Russia has reserves. They have reserves, some reserves in dollars and other currencies. And then finding that they don't really own that, meaning they're not free to use it, meant that that was a massive shift to the world's understanding of what you own and what you don't, which plays phenomenally well to gold, because gold is what is understood by central banks as a way of earning resources. Now, you're also a Russian oligarch. You've had all your assets seized with no courts, no lawyers involved. So now you don't even own your own property. Now, it depends which EU law they do this under, but it's very concerning. So gold has a clear opportunity again for people. And I think that over time, other central banks will increase their gold holdings. Why would they not? Why would India not? India, particularly to maintain its neutrality, why would people not increase gold? But obviously, the other flip side is that is going to force people into crypto.
Raoul, one email I never want to receive is something from my bank saying, congratulations, your account has been upgraded from depositor to creditor.
Oh, so really bad in Spain, right? So friends of mine, parents who were retirees, they were 75 years old. I lived outside of a village called Jesus Pobre, and there was a bank called, I can't remember, Cam Bank, I think it was, which is a local bank. And these people come up to me, these retirees, and say, the bank, it's amazing. They've just told me that I should upgrade my account, my savings account, to a higher yielding account. I said, what is this higher yielding account? They said, well, they told me it's preference shares. I'm like, are you kidding me? Oof. And guess what? They defaulted on the preference shares. So they took people's money in a way that they didn't even understand what they were doing. They're like, you're a Thai, great, we've got high yields for you in the middle of a banking crisis. And what they gave them was preference shares and then defaulted on the payments. And the companies went essentially bankrupt.
Terrible. We were talking a little bit, to get back to one of your prior points about the energy trade and where we're going with renewables, alternative sources of energy, nuclear. We were talking earlier about how two things can be true simultaneously. I'm looking right now at a chart of WTI crude April 22, the April 22 options on or futures on the New York Mercantile Exchange, 109.10 right now. So obviously, this is a trade that's had a lot of lead in it, going back to a low of about $65 in December of 2021. Huge price movement, nearly doubling. But simultaneously, you have this longer-term theme playing out in terms of renewables and newer energy technology.
Yes. Now, somebody, one of my go-to oil experts is Tracy Shooter at Shy Girl on Twitter. She's amazing at this stuff. And she knew how restricted the supply was versus the demand, where the stocks were. And she nailed it. Tony Greer nailed it. And a whole bunch of people nailed that trade. I didn't, because I think the secular trend is different. And I don't trade against my secular view, although I understand the cyclical view that may go on for a period of time. So I think that's super interesting. So now what we've got is a situation where Europe is massively incentivizing the greening, but under incentivizing or penalizing oil. So then oil production is not enough to meet demand, and you get this situation. And this kind of volatility in the commodity markets will probably be persistent over the next few years. Hello?
I can hear you, Raoul. I think you just dropped us. Yeah, part of the fun thing about doing these Twitter Spaces is, we're pioneers doing this. The technology is not 100% ready for prime time, so occasionally
we don't care. We don't care. I'm not 100% prepared for prime time either.
That's why it's Real Vision After Dark. I love doing this GarageBand stuff.
Yeah, and I've got a glass of champagne in my hand. It's a Friday night, so all is good.
It reminds me of the early GarageBand days of Real Vision.
It reminds me of every day at Real Vision. we try and look professional. We're not.
Raoul, we're a grown-up company now with 175 employees.
Oh yes, of course we are.
Listen, Raoul, let's talk a little bit about crypto, because I have some charts that we shared today on Real Vision Daily Briefing that I think are incredibly relevant. Crypto adoption and some of the new stuff that you've done on correlations. Really fascinating stuff. But I'll let you take that. So I'm kind of well known for pointing out Metcalfe's law and how it works, and talking about adoption as the key driver for the crypto space. For a while, I've been using the chart that crypto had been growing at 113% a year versus the internet was growing about 65%. We updated the numbers for the end of 2021, and crypto is growing at, 165% versus the internet at roughly the same time. We started both of them at when they first hit 5 million, and then 5 million users, and then grew it from there.
And crypto's still growing at 100% pretty much, 80%, 90% faster than the internet. It's the fastest adoption of technology in all human history, which I keep telling people, and people don't really understand what that means. Is exponentiality means that we could get to 5 billion people by the end of the decade. We get to maybe 2 billion people in 4 years. So we've got an enormous adoption going on, and central bank digital currencies are coming, going to accelerate it, and all sorts of other factors will accelerate that trend change. We've seen the regulators basically green-lighting it too. So it's all coming.
And by the way, I'm tweeting this right now. If you want to take a look at that chart at Ash Bennington on Twitter, you can take a look and actually see what Raoul is talking about.
Yeah. And so the next thing is, okay, Raoul, smarty pants, you understand that it's network effects, and that sounds all very good. Prove it. And you can mathematically model it, but it's really complicated. So I'm slightly lazy and a bit of an idiot. So what I did was try to figure out, how do I hack that? How do I find a way of approximating what drives prices in crypto that's based around this idea of network effects? So Remy, who works with me, and myself, we spent a few days just throwing together different data series, on-chain, off-chain, all sorts of stuff, to try and figure out, okay, what is the driver here? What drives crypto? And suddenly it came clear that it's basically something like 95% of all crypto moves of every single chain is driven by two things. The volume of transactions, whether it's daily, weekly, monthly, in dollar or other value terms. So not number of transactions. That's a red herring. It's actually volume of transactions multiplied by the number of active wallets. So how many people on the network, and basically the interconnectedness and the applications on the network, which creates value and volume. Those two things essentially represent Metcalfe's law. And when I started putting these prices, this model together and fitted it on axes, on two different axes, it basically is a perfect correlation. I found it first with Bitcoin, then it's the same with ETH, then it's the same with XRP, then it's the same with Polkadot. I just tested all of them, and they're basically all the same.
Let's walk through them. I'm actually tweeting out your Bitcoin chart right now, and it really is extraordinary. We look at a lot of charts, and it's very rare to see these kinds of correlations. So walk us through exactly what we're seeing as we look at this chart.
I'm waiting for the chart to appear on your feed. I haven't got it on the feed yet. But what it's basically saying is, when you create this weird number, whatever that number is, one multiplied by the other,
should be up now.
That chart that does not include price in any part of the equation exactly matches the market cap of those. So it's telling you that the two drivers are the amount of volume in value terms and the number of users. So step back. If you have a network that does 20 billion a day, but there's only 2 users on that network, it's not very valuable. It's not a network. The same $20 billion a day, but there's 1,000 users, is actually worth a lot more money. And that's what it's telling you. So these two things are really crucial in understanding network effects. It also tells you that you can pretty much ignore all of the other elements of chains. It's only about, do people attach a value to it, and are they using it? Those things, and do they want to be involved? That's it. That's all it is. Now, there's different reasons. Bitcoin has different reasons than Ethereum why people want to be participants in the network and transfer value across it. But I just found it profoundly useful to understand that it is not necessarily speculation, because if it's speculation, you don't do much volume. If it's speculation, you might have spikes in volume, but it can't describe the price over an extended period of time. So very useful. I will be able to now build this out, start looking for forward-looking indicators, network health. But I even tested it. It wasn't in the daily briefing, but I even tested using the two models to look at the fair value of the ETH Bitcoin cross and stuff like that. Really interesting. The only thing that I have observed is ETH is trading above its fair value model. It was trading below for a period of time, and then it started trading above. That switch was that switch when I got into ETH and the market started realizing that ETH was probably undervalued versus Bitcoin. Fine.
Yeah.
But then the next phase was the 1559 changes, which meant that they were now burning ETH. So now you've probably got another factor that you need to put into that, which is the amount of supply that comes off. I don't know. It's too early days to say whether that matters now. It really will matter in a deflationary environment. It's one of the reasons why Luna is outperforming so dramatically now, because they're burning so many tokens. It's crazy.
Yeah, by the way, you can actually see that on the chart. I just tweeted the Ethereum version of that chart. Pretty extraordinary.
Yeah, it's really interesting. And I don't want to sound a bit wanky about it. This is a breakthrough. All the bullshit that goes on in the space, this is a clear technology, Metcalfe's law, network adoption model writ large. And it's really useful to know that this is what drives the value. So when everyone says, well, this is just magic internet money, no, it's fucking not. It's clear that it's all about these things.
Yeah, and by the way, I've just tweeted out Polkadot as well, same chart. Really incredible correlation.
Yeah, and even XRP, which is something that some people absolutely hate, other people love, it's the same. So XRP is fairly valued, considering. Now, so imagine with XRP, right? Now we know the framework. Let's say XRP or Ripple settles the lawsuit, and we're allowed extra volume back into XRP because US people are not finding it difficult to buy anymore. It goes back on exchanges. Well, the likelihood is that XRP will go up in value. Even if the number of wallets don't increase, just the value that can be exchanged for people who are kind of trapped in positions in XRP will go up. Okay, really bloody useful.
Yeah, I just, by the way, tweeted the same chart for XRP. Don't yell at me if you hate XRP, just for illustrative purposes only.
Yeah, I don't care.
Raoul, one of the really fun things about these Twitter Spaces is doing the live question component of it. I think we have about 2,000 people listening to us right now, Raoul.
Jesus Christ, really?
Yes, indeed. Right. And so I know there's some folks who want to jump in and ask some questions. So let's open up the floor to those folks now. We'd love to get your questions in. Oh my gosh, I see Elaine Lee is in the audience. I see Weston Nakamura. God knows what time it is in Tokyo. But we'd love to get them up. Curious if you guys have any questions as well, and to the broader audience as well, if you have any questions.
Yeah, so let's get some questions in, and I'm sure I'll have some questions too.
Yeah, as we're waiting for people to come up, it takes a couple of minutes. The technology is still a little bit wonky. Final thoughts on these charts and what people should draw from this conclusion. As you said, not a forward predictor of price, but shows some insight into the way the value of these networks work. In your view.
It's much easier to choose what things to invest in once you understand what drives price. So it doesn't mean you can't get the pump and dumps and all of that stuff. Fine, it's a feature of the space. But you can see what the reality is of what drives. And now, I just think it's super valuable. The other thing, before we move on from this, is amazing news about Yuga Labs acquiring Meebits and CryptoPunks. So now they own Bored Ape Yacht Club, Meebits, CryptoPunks. What you've got here is a massive and rapid maturation of the space of NFTs of 3 giant Web3 media brands under Yuga Labs. It's telling you how fast this is moving and what this is going to mean. It is really, really interesting.
Raoul, it's Elaine here. Hi, happy Friday.
Hello, boss. How are you?
How are you, love? Well, so I'm going to be honest with you. I dipped in and out of here because I'm also listening to Sergio Silva in another room talking about Meebits. And just going back to your point of listening to the drivers of basically volume of transactions. I'm on the OpenSea Meebits page right now, and if you look at the activity there, it's like people are buying this like just minute after minute. The floor price at the moment is 6.5. And I just don't know where this is going to go, because if you think about it, one Bored Ape Yacht Club is now 70 ETH floor price now. So one of these Meebit things that I think people like choose the character of how they look like and whatnot. And one of these things is only going for 6 ETH at the moment. So I'm super bullish about this stuff.
So Elaine, the key thing here is over time, can volume or value exchange go up?
Right.
Outside, and normally you need utility, something useful to come of it, because after a while, if not, it kind of falls down. So the question is are Bored Ape, for example, or Yuga Labs going to drive utility? Can you use this PFP, your community kind of token? Can you use it for other things? Can you drive value back to the chain? If that is the case, then these things are still undervalued. If it's not the case, then they're overvalued. It's fascinating to watch how this plays out.
Yeah, well, if you think about it, just the roadmap, right? When you say utility, I sort of think about the roadmap, and I just think how much, Bored Ape. I was recently at a hedge fund conference in Miami, and I found my little crypto corner, Raoul. I found my little crypto corner with all these crypto hedge fund managers, and they came over to like the Real Vision bit, and I was like, so what do you think about NFTs? Do you think it's an actual, like, NFT is an asset class of its own? And they were like, Elaine, I've got to tell you, we've got a couple of apes just hoarding in the vaults. And I was like, what do you mean? They're like, I don't really know what, where it's all going and how they're using it. But you see these NFT projects becoming, when they're sold out, all right, this newfound wealth, they become like their little own startup companies. And then you see them sort of becoming into massive power brands, okay? So say, like, for example, I spoke to the World of Women founders a couple of weeks back, and you saw this.
Which is an amazing project as well. It's a great community.
And the World of Women folks, Yam, who was on the stage of the Billboard Awards, and then you saw her profile picture wearing a Stella McCartney dress, and everything sort of just marries together in these NFT projects that I'm seeing. And it's just like, this is, I'm a journalist of 10 years. Of course, this is breaking news to me. So I had to jump in and say, like, I'm just watching the volume of transactions on Meebits at the moment for 6 ETH compared to the other big projects that Yuga Labs is in charge of. Meebits is, I don't know.
Hey, Elaine, this is real quick. This is amazing. I love you jumping in and doing this real-time reporting. Go out and retweet some of the, screenshot this and tweet it out. By the way, if you're not following Elaine Lee on Twitter now, you should. ElaineLee.eth. It's actually Elaine. Elaine, how do you spell? How do you what's your mnemonic for this? Your Twitter handle is really.
You know what, Ash? Let's
So my name. There's a lot of Y's. There are 3 Y's.
So here, let me tell you. So my ETH name. So basically, if you want to send me all the infamous amounts of ETH you own, you can just find me at ElaineLee.eth. Okay.
So here's a question for you, Elaine.
Go on.
So I send you something. You then send it to your ledger. You've now doxed yourself. I can now look into your other accounts and see everything you own. I don't get why people want the .eth address. I can understand it for kind of shrapnel bits and pieces.
Right.
But if you're not careful, you expose everything you own. And some people are okay with showing their bank account to everybody. But in a world of nefarious actors, it's the last thing you want to do. And that's my view. I'd love to hear from other people in the community whether I'm wrong with that, because I could be.
So Raoul, I
always assume I'm an idiot.
I have Ash Bennington registered as my .eth address. And the thing is, you can, with ENS, you basically can point that placeholder to any wallet you choose. So I think what people typically do is essentially they have a public facing wallet where they accept, payment or donations, and they don't then hold, for example,
that's exactly what it is.
That's exactly what it is. You can't move it anywhere and cross-contaminate anything else. So you can't actually hold value in that wallet. It's kind of, I don't know. I don't really like it.
You're right, and you make a valid point about this idea of cross contamination, because as soon as you transfer it to another wallet, then obviously that's something that exists on the Block Explorer, and there's a very clear breadcrumb trail from the public wallet to your other wallet.
Yeah, because everything's on chain. This is how they catch criminals.
But then also,
and this is how criminals catch you.
What are you up to, Raoul?
No, meaning you can be a good actor, and bad actors can now figure out, okay, is this person worth robbing? Is, all of that stuff. It's not good.
But Elaine, one more time, your Twitter handle, so people can follow you and they can take a look at what you're looking at right now.
Oh, yeah. So, hi, everyone. Gosh, I didn't realize, after dark, I'm glad I stayed sobered for the first part of it, because I thought this was RV after dark, but I just realized our editorial meetings or whatever we do at Real Vision is fascinating for an open space for people to listen. So I am Real Vision.
Friday is not a requirement for Twitter Space.
No, I'm drinking.
It's not even heard.
We have to hear from some of the people what they're concocting up on a Friday night. But so basically, my name is Elaine, and I'm a Real Vision crypto producer. And, all the videos that Ash put out, it probably goes through my little fingers at some point. You can follow me at Elaine, YYLY. Oh, and by the way, before I actually go and fix myself.
Before we cut you off.
Oi, listen, I want to play a favorite soundbite that I've managed to produce tonight. Can I play you it?
Oh, Jesus, what is it? What have I done?
I'm nervous.
Actually, see how you guys are both really scared when I jump on the call, as you should be, right? But here's the stuff I have to protect, okay? So here.
One of the disclaimers that Real Vision needs to put on every pod or every research piece by Raoul, that every time I end up reading one of his pieces, feel like I need to buy more crypto, and he's an Uber bull and a real champion for the space.
I love that. So that's an interview that I'm dealing with, but I'm going to make myself a drink. You boys carry on for a second.
All right, Elaine, thank you for joining us. That was great. And go ahead and jump in and grab some of those screenshots. We'd love to retweet them and talk about them. Thank you so much for jumping in, Elaine. Okay, no more ringers. Now we're opening it up to folks who are on the space right now. Let's go ahead and take some questions. Looks like we have... I'm trying to pronounce this name right. Nanaimo Trader. Nanaimo Trader, if you can hear me, please go ahead with your question.
Yeah. Hey, shout out to everybody. Hello, sweet weekend. I'm the guy that's not drinking till May 15th. So, so I'm almost feel like I'm in the wrong place, but I'm on my walk out in nature, and I just had to jump in and listen when I hear Real Vision go on. So thanks, guys, for
Nanaimo, where are you? Where in nature are you?
I'm out in Vancouver Island, and right now
so it's cold.
Oh, it's cold, but Raoul, it's beautiful here. We have the crisp, best air in the world.
It's gorgeous.
Yeah, we overlook the ocean. I'm looking right now at it's beautiful. I'm up on the side of a mountain. But I got to say, thank you, team, like Real Vision and Raoul. You guys have inspired me. I feel like I'm finally getting to the deep end of the pool, and I can understand what you're talking about. So my question is this, I'm just wondering if... I think a lot of I recommend you to my friends. I say, hey, here's a video. You need to listen to this.
Cool.
And I would say, could you speak to the retail investor? I'm just using that term loosely because I think many people are on managing their crypto risk during these times of uncertainty, especially when so many people have seen such a big drop in the last few months in their portfolios. Just wondering if you could speak into that.
Great. Go ahead, Raoul.
So, always start with the macro secular backdrop. What is that? That is the fastest adoption of technology in all history. If you back out the numbers, you kind of get from $2 trillion market cap to $200 trillion. So if that is the case, then all of the movements within it are noise, unless something has entirely failed with the ecosystem. So once you keep that in mind, it tells you that you need to be able to suffer drawdown. So if you're an Amazon investor, you have to take a 95% drawdown, an 80-something percent drawdown, a few 65% drawdowns, and then the drawdowns got less as the network got adopted more so, and more value was transacted. So it tells you have to be accepting of volatility, and therefore it tells you how to size your position. You have to size your position according to the fact that you need to sleep at night. You should never use leverage because this is normal if you're a buy and holder. Now, some people are short-term traders. I'm not that guy. So if we're trying to play the mega trend of the entire market cap going up 100x from here, then you need to just stop looking at prices. Or what I've learned to do, and this is a new thing for me, because my time horizon used to be, generally is for most macro trends, 6 months to 18 months. And I can deal with volatility within that, and then I'll have some sort of stop losses, tend not to be in price sometimes, usually in ideas, when my thesis is wrong. But in this space, you have to be able to accept all of those drawdowns. So you can't use leverage, and you need to just think of it as a long-term investment. What am I going to get out of this in 10 years' time or 5 years' time, whatever your time horizon is? And then what that forces you to do is say, you know what, if it's the bottom of that regression channel of a logarithmic chart, then I should be adding to this position unless the entire thesis about crypto is wrong. Now, if you can find me a reason that the entire thesis is wrong, that'll be fascinating. But I don't see it in any way, shape, or form, considering that adoption is accelerating. Could inflation and the macro slow down the story this year and next year? Maybe. Do I care? Not at all. So that's how I think retail investors should do. Now, I was speaking to Olaf Carson-Wee today. There's an interview that's going to come out. So Olaf is the largest asset manager in the entire space. And I asked him these questions as well. He's like, listen, if you're retail, you should either just buy and hold. And I said, okay, what do you buy and hold? He said, well, if you're pretty passive, just buy and hold something like, Bitcoin and ETH. Or you might want to own the Bitwise 30. There's a closed-end fund. Obviously, it trades at discounts and premiums, so it's a bit tricky. But that over time should give you the exposure to the space. If you are going to trade smaller tokens, that's okay, but understand you're further out the risk curve and they will be more volatile. And the probability of you knowing what's going to succeed in network effects terms are low because you are not an expert. Even though you think you are, most people are not. So kind of stay away from doing too much on the riskier end of the curve. And then just think of it as a long-term savings account and don't look at it. So how I do that now, the trick I learned is I look at daily prices. I even look at hourly charts sometimes because it's kind of fun. I just don't trade. The only thing I do is look for entry points to add more positions because I know the long-term secular trend. And that is the secret to everything.
Yeah, extremely well said, Raoul. And Nimo Trader, thank you so much. I hope I'm pronouncing your name right.
You're saying it perfect. So thanks, guys. And I think that's really helpful because I've just had somebody recently reach out and like, hey, half my portfolio is gone. What do I do here? And I think that's very helpful for people to hear.
Yeah, so half my portfolio is gone. But I don't even look at the P&L. I had to open it today for accounting reasons. I hadn't looked at it. I kind of know that I'm down from peak and I'm up from where I bought it, but I don't really care. And that's the key point because it's a long-term vehicle. And if I don't need the capital, then I can just leave it there. If you need it for other stuff like cover your cost of living or pay your mortgage, then you've oversized your position.
Yeah, and I'm sure a lot of other folks on this Twitter Spaces were wondering exactly the same thing that the Nimo Trader was asking there. Next question. Looks like we've got Power Bitcoin. Power Bitcoin, a regular listener on these Twitter Spaces. Power Bitcoin, if you can hear me, go ahead with your question, please.
Oh, hey.
Hey, man. Welcome back.
What's going on, Raoul Paul? I'm a big fan. You actually kind of orange pilled me on Bitcoin back in 2020 when you were doing all those interviews with like Jeff Booth and the Winklevoss twins. And Bitcoin's the trade of the decade. So I actually contribute a lot of my Bitcoin journey to your YouTube videos. So I appreciate that. So I have two questions, actually. One is on the economy. You were speaking about a possible recession. Do you think if we see a recession at this point that it can turn into a depression? Guys like Robert Kiyosaki are calling for the Greatest Depression, that we've seen since the 1920s Great Depression. Do you think that what's going on in the global macro environment can cause this Great Depression that we haven't seen in over 100 years?
Great question, Power. Raoul, what are your thoughts on that?
No, I think it's a Great Depression in the way that we understand it, which is a deflationary bust or even an inflationary bust, right now is almost impossible. It's impossible for the demographic reasons and also because the central banks play this smoke and mirrors game of hiding the effect on asset prices by lowering the value of the denominator. So if you increase the amount of dollars in the system, you lower the value of the dollar, not versus the euro or the yen, but versus the value of hard assets. So what happens is, once you divide things by the value of the denominator, which is the Fed balance sheet, you see a different world where most markets never recovered from 2008. And that's how people feel. If you think about the kind of dystopian world and polarized politics, it's because everybody, left and right, coastal inner city to inner America, feel like they've been fucked somewhere. And yes, they have. They've been screwed by demographics and all of the other issues I've talked about, but also it's been papered over by the devaluation of the denominator. So it's very hard to get a depression in the terms that we understand it to be, because it kind of juices the value of asset classes. The depression really has probably been playing out over the last 20 years anyway, which was driven, and we see it in Europe, for example, where the equity markets have gone nowhere, or Japan. It's where low GDP growth persists over time. So it's a slow-running depression that makes people feel more politicized, more angry, because they know that they were sold the American dream and what they got was something incredibly different.
Yeah. Next question goes to Andy. Andy, I believe that is Allen Ginsberg in your profile picture. Am I right?
Yeah, that's it. Great to meet you guys.
Great to meet you.
Raoul, interested in overseas markets. I split my time from the UK and the US, currently in the US, been here for about 10 years or so. Looking back at the UK market, it's interesting how it's underperformed over the last 10 years or so. And looking particularly at the FTSE 100 or the 250, you've got a lot of resource stocks in there, a lot of interesting plays given the macro backdrop. I wonder what you think about UK, EU. The other market I'm also looking at is the Australian market. The Aussie dollar seems to be reasonably strong given the what's going on, and again the macro backdrop would seem to play into the Australian market. I wonder if you're looking at any of those overseas opportunities at the moment. Thanks, guys.
I gave up with the UK market years ago because it's just not driven by sectors that generate growth. So it used to be basically finance and resources. Both those sectors are ex-growth. Now, resource growth, yes, is higher now. We will see that for a period of time for the reasons we talked about. Is that going to drive enough interest in the FTSE with a retiring population? Don't forget, legally, as you retire in the UK, you end up having to generally switch towards credit or bonds. So the whole structure is set up to sell equity. All of Europe is to buy fixed income, which actually finances government deficits. So I don't believe in that. One of the things I do love is the chart of the FTSE for 250 years, or the UK stock market for 250 years. It was essentially range bound. It was cyclical until the baby boom generation started buying equities. It's a fascinating chart. So have a look for it when you could see it. And it tells you that equities are not necessarily an up-only thing. And maybe that is driven by the devaluation of currency, because don't forget the UK at the time was pegged to gold, even before it was pegged to silver at various points. So I don't really find a lot of interest in the UK market for a trade, for a 6-month bet. Maybe for me, it just doesn't drive enough returns. I think in a world of exponential technology, incredible opportunity, and certain mega trends like fixed income yields and stuff like that, I'd rather play those than play a cyclical trend within a market that's going nowhere.
Yeah, thanks for your question. We appreciate it.
Let me give you Australia. Sorry, Ash. Let me give you Australia. Australia, very different. Australia forced people into superannuation funds. So superannuation funds mean that the population puts an excessive amount of money into their domestic stock market, which means it's pretty much immune to all macro. For short periods of time it is, but otherwise it isn't, which is also how the Indian stock market works, not from the same thing, but because the general population in India is below the age of 30 and everyone's starting to hit savings age. So the Indian stock market barely ever goes down because people are piling money into mutual funds. Fascinating.
Yeah, really interesting. Listen, I just wanted to thank everyone again for joining us here on their Friday night to have this conversation about macro, about crypto, about digital assets. If you're enjoying this conversation, go ahead and smash the retweet button. We'd love to get this out to reach as many people as we possibly can. Talking of which, next question. Looks like we've got On-Chain Monkey in the conversation. On-Chain Monkey, if you can hear me, go ahead, please.
Hi. Yeah, thanks for inviting us up. So this is Danny Yang. I'm behind.
Hey, Danny. How are you?
Hi, Danny.
Hey, great. And I was listening to you earlier, especially when you were talking about Yuga on Larva Labs and the acquisition, and the part about privacy and having a ENS name, right? So with NFTs, and especially with PFPs and NFT communities, it's very much about your identity, right? The PFP is your identity, and so you have many people are pseudonymous, but in reality, the Ethereum blockchain is a public record, and basically anyone who really wants to know who you are, they can find out who you are. So as Elaine does, why not just share who you are and get the benefit of that versus people will know who you are anyway.
Interesting. On-chain, do you segregate wallets in the way we were talking about earlier, where you sort of have a public-facing account and then you hold other things in different wallets, or do you think of it kind of in a more like radically egalitarian sort of world, this flat way, where you just go out and say, hey, this is who I am, this is my identity, this is my wallet, I am who I am?
That's a great point. So I guess first my background. So Bill Ty is my co-founder, and so he actually invested in my companies in the past. So one of my earlier companies was called Blockseer. So my background is actually data science and computer vision, more AI. So my earlier company in crypto was actually a blockchain analytics company. We analyzed Bitcoin. So this was before Ethereum. And our product market fit back then was for law enforcement. So we actually, like the U.S. Secret Service was our first customer, and we were the first outside company that they used to investigate, Bitcoin crimes. And then we did Ethereum after that when Ethereum came out. And so, I know this space very well on how you can look into the blockchain to see, what is happening for good and bad. And so for like PFPs and NFTs, I think it is good to have two, as you said, segregate public and private. But if you're using a PFP, that is your public thing, so it might as well make all of that public. And then for private things, just keep that separate. You don't have to expose your Coinbase account to the public.
Raoul, it's interesting. Many different philosophies. This is obviously evolving very quickly. On-chain makes some really interesting points.
I've lost you, Ash.
Raoul, can you hear me now?
Yeah, I can.
Yeah, I was just saying, obviously this space is evolving very quickly. On-chain makes some really interesting points about just thinking about this in a different sort of philosophical framework. I was curious if you had any thoughts.
I think the point being is that identity should be public. It can be hidden, i.e. who you are, but your identity should be public, and you should be responsible for your actions, and people to be able to hold you accountable and see that. You don't need your money to be accountable to everybody else either, unless you're obviously being you're a malactor, in which case the authorities know how to trace you. That's the whole proven point. So I agree with Danny, is that it's really important that in this world of digital identity, these things are transparent. I think it's crucial. I think PFPs are the first move towards what that really means. And we can have numerous anonymous identities, but underneath, we need to have our identity. And I think we're going to go to a world like India has with India Stack, where I can go in with my fingerprint and I can do my KYC in a second. And it gives all of my details shared in a certain way. Now, with zero-knowledge proofs, it gets even better within crypto, because then I can share with my Ethereum address or my fingerprint or whatever format we want to do, but it'll be on the blockchain, my KYC instantaneously to prove I am who I am. And then for, bad actors, like we've got a problem on Twitter with bots. We'll be able to prove who's a bot and who's not. Well, that cleans up a lot of the world. The people who are bullies and attack you, you can then find out who they are. Do you want them as part of your community or not? People say, well, that's cancel culture. It's not, because you can have multiple communities and different people can operate in the communities they want. You just say, well, I don't like this behavior and I like that behavior. I don't care what it is. You may have different views to me, and that's fine. We can either share together in a community or we be different. Identity does all of that, gets rid of all of the bureaucracy. I mean, I live in the Cayman Islands. Everyone thinks, oh, yeah, this is where they launder money in a banking system. No, it's fucking impossible to open a bank account, to transfer everything. They walk checks from one bank to the other because there's no internal transfer system. All of this with digital identity goes away because the whole world looks at the Cayman Islands for KYC. They're going to launder money, so we want KYC, AML. Great. Can you just give me an easy way to do it so I can do it in seconds? So yes, I agree. There's some real uses here.
By the way, I think I just saw Bill Ty join this Twitter Spaces. I don't know if he'd like to take the microphone, but we'd love to have him come up if he'd like to share something with us as well. And great question on chain. Thank you so much for coming in and giving us those comments. It's really always important, I think, and what we try to do at Real Vision, especially in this fast evolving space, is to share a wide variety of opinions, views, and philosophies. And we really appreciate you weighing in. Next question. Let's go to Kelly. Kelly, can you hear me?
Yeah, I can hear you. Can you guys hear me quite well?
Loud and clear, man. Go ahead with your question.
Well, yeah, I'm coming to you from Tokyo, traveling right now, so I apologize if I have any spotty service issues. But first, I wanted to shout out one of the writers and analysts for the Crypto Dev team, and find a lot of great value coming from Raoul and Real Vision all the time. So thank you for that. But what I wanted to shout out is yesterday, I do a regular Twitter Spaces as well, and we were talking with TXMC and Scott Melker, Wolf of Wall Street, and we were basically talking about, and I'm curious what Raul's perspective on this is, the nature of the correlation between traditional markets and Bitcoin, and at what point we're going to see, I don't want to call it the snowball effect, but basically a little bit more of a parabolic effect of separation of between the two asset classes. And TXMC shared a great tweet yesterday, basically rather than looking at it on a 24-hour correlation, but looking at it just on the times that both markets are active at the same time. But I'm just curious, with everything going on geopolitically, if you think this is kind of the point where Bitcoin is really on the best stage it's ever been, and we're going to start to see that, or do you think you still think it might be another 5 to 8 years before you really get that separation?
Great question, Kelly.
I wrote a tweet about this. I think the separation is already there. Just look at the performance over time. There's no correlation. Because you've got two properties of Bitcoin. One is store of value, so therefore it should correlate with gold. The other one is new technology, network adoption, which correlates with NASDAQ, but it also correlates with how fast its adoption is growing. And we went through that earlier. The adoption of the network is growing faster than anything else we've ever seen before. So over time, clearly, it's going to massively outperform. So the correlation is a short-term noise driven by the fact that it's now a real asset. It gets driven by liquidity, same as everybody else. And it goes up and down as people have to shrink their positions, increase their positions. And people, like most people, even on this call, will have, crypto positions. They might have some equity, blah, blah, blah. Things fall. They get a little bit nervous and want to reduce their risk. So correlation is passing in the short term. It shifts as well. It goes from the dollar to bonds to equities to nothing to gold. Yeah. So the reality is is all noise. It's all about network adoption. That is the only thing that matters, and I proved it. If you look at Ash's tweets today, it shows you those charts. The network adoption is the big picture. Everything else is noise.
Yeah, and you can take a look at those tweets on my Twitter feed at Ash Bennington. A few months ago, Raoul, we did a tweet or two where we were retweeting Kathy Wood, who had, or ARK Invest had done this sort of deep dive that Kathy Wood spoke about on Real Vision about the correlations. And essentially, you see the correlation between different asset classes and Bitcoin fluctuating wildly. By the way, with that said, looks like we've got Bill Ty, who has just joined us as a speaker. Hi, Bill. How are you doing?
Hey, Ash. I'm doing well. Raoul, nice to hear your voice.
Hey, boss. How are you? You well?
Good. Yeah, we're. I'm actually in Jackson. I'm calling in here from Jackson Hole, and we're just wrapping up the third day of the Ethereal Summit. The people on the line may or may not know what that is, but when Ethereum got started, the 6 founders kind of peeled off and did separate things. You know, Vitalik continued, of course, to drive the developer community, and Joe Lubin drove kind of a business applications incubator funding community that built a lot of things on top of Ethereum. And part of that is Decrypt Media, which together with them throw the Ethereal Summit. And it's a wonderful powwow of really interesting people, just kind of bringing some of the things that they're developing to light and talking about applications and pretty cool stuff. I think if there are some eye-opening things this year, the ability of the chains now to have very kind of atomic resolution, granular views into the component structures of financial instruments. It's really, it seems like it's like there now. So some of the things that I'm seeing are new low friction ways to do some things around like what used to be, say, like collateralized mortgage obligations or the pooling of debt obligations, where you can kind of take a whole bunch of different, say, mortgage structures, take them apart by like peeling off the interest piece, pooling different ratings, a little bit like kind of what ended up happening in the subprime crisis or whatever. But it's pretty cool because you can kind of unbundle and then reconfigure and consolidate these things into new forms of instruments, and it's very liquid. And there are similar kinds of things like Ethereum has a subchain. There's something called Tree Trunk that runs a Polygon that also allows people in a community to, like if I were to gather 20 people on this call into some, kind of a collaborative effort to fund something, there could be sort of almost like a layered community building kicker where, the people that join, there'd be like a slight commission structure. So there's a financial incentive to bring people on for the marketing effort. It's pretty cool, the kinds of things that are coming that are just, they sound simple, but they are so much more advanced than the basic structures that have existed on Bitcoin and Ethereum in practical use for the last, 3 or 4 or 5 years. So pretty exciting stuff coming.
Yeah, I love this idea. Basically, what blockchain technology does is obviously record ownership and transfer and all that stuff, but it's actually an organization tool for humans and capital and other things. And so the number of opportunities that coming out of this are something that I don't think any of us really understand yet, because you can organize people. I thought for me, the Constitution DAO was a massive moment in time. Not that it failed, it's the fact that you can coalesce capital and people in basically minutes around an idea. And that, once you realize that, it's a huge unlock on what the power of community really is, and the power of pooling assets, different things for different people are. I just think it's fascinating.
Yeah, and Raoul, to your point about the exponential future that we are living, in the moment here. The last time I was on, we had a brief discussion about something I mentioned called Reed's Law. And
yes.
Yeah, and
I've been already talking about it as if I knew it all the time.
Okay. Yeah, because it's pretty cool. Because it for those of you on the call that haven't heard about the concept from Raoul or me, just to summarize it, graphically, if you think about two dots, you take a piece of paper, draw two dots. There's one line. If you draw three dots, there's three lines. So it goes up more than linearly. And then if you draw four dots, there's six lines. So it goes up by an exponential factor because the number of interconnections between all the points goes up a lot with each addition. And it's the value, for example, of what makes a Facebook. The value of the total pile of people goes up with more than the incremental one person added, because there's more than one connection and many more for the bigger the thing gets. So that's the law we've been living in Web 2 in what's called Metcalfe's law. But if you look at the next level of that, there's something called Reed's Law, which is basically the ability to take the surface area of all those dots that are now in a sphere. And as something kind of jiggles, it vibrates a bunch of other stuff, because the interconnections now can build other transactions on top of them that are more than linear. So it's kind of like more than linear.
I've explained this, Bill, as networks on top of networks.
Yes.
So
exactly.
The more networks, the more Metcalfe's law affect networks you layer on top of each other that are interconnected, the more exponential the price.
Yes. Yeah. So, and it's kind of the notion of if you have a couple people in an economy, it kind of goes. But if you have a lot of people in the economy, and then there's a corporate or whatever, some business starts, it has the ability to affect a lot more people. And then the interchange between all the different peer nodes goes like crazy. So it's that's what we're entering in crypto. And I think that's
how I've always talked about this as well is okay, we started with let's call it mobile phones for now, as opposed to going back to phones, but mobile phones and data. Mobile data plus the internet is two Metcalfe law network effect models on top of each other.
Yeah.
Then you add the internet of value, and let's use the layer ones, for example. So now you add Bitcoin, Ethereum, etc., and they go even more exponential, and the space is growing at 165% a year at this stage versus the internet, which is growing about half that speed. Then you layer on the applications layer, and we've seen this with NFTs. Great example is, and here's a consumer applications layer built on the network effects of crypto, of Ethereum particularly, but it can be whatever chain, on top of the internet, on top of data, and they all go even more exponential. That, I think, is, again, a lot of people don't understand this, but it's an amazingly powerful thing.
Yeah, and it's really crazy to see it when it gets really expressed. Of course, this market, as you guys were talking about, is very little cyclical, a little volatile, but within it, there are waves that are just insane. If you guys followed the journey of Axie Infinity last year, I think, and these are rough numbers, but I think, January of 2021, I think the revenue was something like $10 million a month. And by September, it was $800 million a month. I've been in venture capital for 30 years. I had never seen anything grow that fast in my entire life, but it's exactly that effect that Raoul's describing, where, instead of, I guess, the phone and the data, it's kind of the person as the node, and then their interaction with a financial system with assets that grew in value because the usage of the assets made the value accrue to the assets, so they got more valuable. So it was, exponential upon exponential, and it has produced a gusher of a business.
And Ash mentioned this earlier. The difference with the digital asset revolution is the fact that, unlike the telephone revolution or the revolution in the internet, you couldn't own the network. So you could only own an applications layer on the network. In this one, you can actually just own the network. It's incredible. It's so empowering for people to be able to invest in the network itself. And so you're not having to choose which company succeeds.
Yeah, and there's going to be a generational shift on top of all this stuff that the people on this call are pioneering. you all just watch your kids. If you see your kids playing on Roblox or Minecraft or whatever, you see the future, right? Because, you'll see these kids in packs basically dealing with digital assets. It's like they were born to do that. And they think that dealing with, money, like paper money, it's kind of weird. I remember taking a teenager to a bank, to help open a bank account. And she says to me, "Wow, this is like a museum. Do people even go here? Why do they go here? Why don't they just use their phone?" I said, "Because you have to sign some papers to open an account." But the world is going to shift in this next generation. It's already mind-boggling. It's going to get more mind-boggling.
Hey, I just wanted to say thank you guys for having me speak, and thank you again, Raoul. I'm going to jump off, but I wanted to shout out to Bill Ty as well, because he and I actually helped produce an event of his a few years ago in New York for his Mai Tai project. So I just wanted to shout out to him real quick. And again, thank you to everybody. Such great content you always put out. So thank you for that.
Thank you.
Very cool.
Thank you for throwing that function for us, man. It was foundational. I think so many things came out of that function in kind of blockchain for music and a whole bunch of other things. So thank you.
Very cool.
Right on, man. With sayonara.
Very cool. Connecting the world here on Twitter Spaces. Talking of which, we've got a question from Weston Nakamura, Real Vision's own Weston Nakamura, I should say, for both Bill Ty and Raoul. Weston, if you can hear me, go ahead with your question, please.
Hey guys, good morning from depressed, deflationary Tokyo, Japan.
Hey, good morning, Weston. How are you, my friend?
Good. I'm good. Long time talker, first time listener. I have a stupid question. I have a stupid question for you, Raoul, on these charts, these adoption charts. Yeah. So, shouldn't crypto naturally have a higher or faster rate of adoption versus the internet, given not only the fact that, this internet's more, I guess, CapEx heavy nature, connecting to the internet, buying a compact PC, installing AOL CD, dial-up modems, regional dispersions of internet speed, accessibility, all that. So, not only is that tougher hurdle for society to jump for internet adoption versus, opening a wallet, but just the fact that crypto itself is fundamentally dependent upon the internet to exist. So crypto has to be least as fast. This
is exactly what Bill was talking about, Reed's law. So you're building exponential networks on top of exponential networks.
Right. And then so wouldn't it actually so the fact that the crypto adoption on the chart, the fact that it's being adopted faster than the internet, isn't that more or less a given? Shouldn't that be the way it is? And wouldn't it actually be disturbing if the crypto rate of adoption was below the internet?
Of course it would. But the point being, it's double the size. So it's exactly proving Bill's point about the Reed's law, is if you built exponential networks on top of exponential networks, it grows even faster. So hence why the applications layer on top of the basic layer of layer ones should grow massively. Now, what is the application layer? Could it be social tokens? Could it be NFTs? Where do CBDCs fit into this? Yeah, I think it's right. And if you were to see that rate drop below the internet, that would be a terrible signal. Now, it might do it for a year or two. That's fine. And it did in 2018. It's the only year that the crypto market actually grew less than the internet in terms of speed at certain points in time. But yeah, no, you're right.
Hey, Weston, I actually have a question for you. You might remember, and I don't know if it was 2015 or 2016, but there was that brief moment in time where the Japanese government kind of declared Bitcoin legal to use. I don't know if it was legal tender for the whole country, but all of Tokyo was kind of getting outfitted with little smartphones connected to their terminals to allow the purchase and sale of, purchase of consumer goods with Bitcoin.
They still have that here.
Do they? Okay.
Yeah.
Yeah, because I have to say, when that happened, I was just floored because I pictured, I having done business with big old Japanese companies in the past, I was trying to imagine the group of people that make up the Central Bank of Tokyo, like probably 80-year-old guys in suits, all wearing the same suit, half asleep at the table, and somebody says, "Oh, Bitcoin." How did that happen? And I think because I was thinking because of the demographics and the debt load of the JGBs, people have been trying to short those for a lifetime and losing. But I was thinking, oh, maybe this is a sign that those old guys realize it's over and they got to get a Bitcoin into every person's hand in Japan. And then when it collapses, when the JGB collapses, then Bitcoin goes to the moon and everyone's a millionaire. But is it? Go ahead.
Yeah, so I actually that's funny you say that, because I my kind of wake up call to really pay attention to Bitcoin was around 2016. They have an annual summer festival. They have food stands and stuff around in Tokyo, and there was literally a lemonade stand, a guy selling lemonade, and that's all he sold. And he said, his sign said that he accepts yen and Bitcoin, and that's when I realized oh shit, I need to really pay attention to this, because if this guy is a lemonade stand and he's already way ahead. So but in terms of Japan was really kind of ahead of the G5 nations of kind of legal means of transaction adoption and all that kind of thing legally. And I think it was because of the fact that Japan keeps shooting itself in the foot to try to reclaim itself as the finance capital of Asia. Cause it lost to Hong Kong, it lost to Singapore. And so the Abe government wanted to, basically have crypto or Tokyo be the Asia, if not the global sort of center of crypto. So they became very kind of lax with regulation for a little bit. But that's the JGB matters. It's just a total separate Widowmaker matter. But, is
the momentum stalled around the Bitcoin thing with Abe, or where's the momentum indicator on where the recognition of Bitcoin might go? Because I was so excited when that happened in Japan, but then I've never heard anything since.
There is a ton of speculative trading, but and then I can go to there's a store that's basically kind of like a Target, they have everything, and I can use Bitcoin there. But otherwise though, in terms of broad scale regulation, I think that it's just everyone's looking at each other to make the first move, and Japan stopped being this kind of rogue pioneer and is kind of falling in line, and everyone's just doing the staring game. The BOJ's been developing CBDC like everyone else too, but I think that it's just kind of like a staring game right now.
So here's something interesting. We're going to go down conspiracy theory now. So when I first discovered Bitcoin, I discovered it because of the fragilities in the banking system. The exact wording around the white paper and the thing that's written there about the chancellor and the banks, clearly somebody who's English, but there's this transatlantic accent. And I thought about this for a long time, and I thought, who would do this? So before 2008, I had been speaking to this various risk teams at the Department of Defense. And they reach out to people like me, kind of macro people, to say, look, what are the fragilities? What should we be looking out for? And I've been explaining to them, listen, we've got a debt problem, and you're going to blow up the entire system. And that's the weakest link America has, is the fact that there's too much debt. And they're like, yes, we kind of starting to understand this. We've been speaking to people who've been explaining it. So Bitcoin comes along, and I speak to somebody at the DOD again, and I say, listen, look at the language. Look at what this is. This is a parallel financial system being floated as an idea, and it's gaining adoption. Who knows how many other ones of these have happened? And I think this is coming from the NSA and GCHQ in the UK. And the answer was, yes, we think the same. And what I mean by that is that the fact that nobody knows where it came from, which we know, but there is a propensity to believe that there is an understanding that the fragility of the entire Western system is this. And in the Western system, I include Japan because it's the same demographics and debt system. And once people saw that there was an off-ramp, they thought, okay, an off-ramp is really useful. And I think one of the reasons Japan accepted it earlier than everybody else is because Japan is 10 to 12 years ahead in demographics and the debt cycle. And they kind of just accept it to say, okay, we need something because we don't know how this plays out and we need to protect our people. So I know it sounds conspiracy theorist, but I've always believed in this parallel system. And I think that it came from government itself to avoid the fragilities of the West.
Well, it's not a conspiracy that Japan has a 250% debt to GDP and it will default on its debt because Japan is not going to pay back its principal. There's no way that's happening.
No, but it depends how they default, right? So if you debase the currency, you need an off ramp.
Right. So I mean, that's it's not too crazy.
Weston, I'm so glad you've joined us with your usual sunny demeanor here on a Friday night.
Of course.
We'd love to get some more questions out for Raoul, for Bill, for Weston. So if anyone would like to come up and ask a question, we'd love to have you. I'm curious, Bill, what your thoughts are about the point that Raoul was making in terms of the evolution and sort of genesis of Bitcoin and what the creators, the Satoshi Nakamoto, he, she, they identity might or might not mean for the network.
Okay, so anything I say is pure speculation. I have no specific knowledge or facts of any persons or groups or anything like that. But I would tend to think that the people person or persons that came out with it were really wigged out by what was going on in the kind of the 2006, 7, 8 buildup when things like the auction rate securities markets were like I don't know how big they are, but maybe $1 trillion markets, like screeching literally to a halt, like stop. The market just stopped, and all the things that were starting to bubble up around the subprime mortgage crisis and all that stuff. Like it was clearly unpredictable how that was going to play out. And it's kind of interesting that the Western financial system survived it, honestly, because the level of leverage, like no one really knew what the size of the shadow banking system was. And Raoul, I don't know if you have a comment on that, but there were many people that thought it was like 50x to 70x leverage.
So it is. So I got this confirmed because I went around the world trying to set up the world's safest bank, and we had this meeting at somebody who's well known's ranch in Texas, and the New York Fed were there. And I asked them directly 2 questions. I'm like, why did you not allow AIG to go bust, but you let Lehman's go bust, and they were within a week of each other? They said, very simple, Raoul, nobody used Lehman as collateral. Everybody used AIG because it was AAA. I'm like, okay. How much is the world's most pristine collateral reused within the system? Rehypothecation became famous over that period of time. So US Treasuries, they said, our estimate is 32 times.
Yeah, there you go.
That terrified the shit out of me.
Yeah, see, no one thinks about it, right? And I think the one advantage that America has is that most Americans don't think very much about stuff like this. Because
what that means to people as well is people who are listening to this who don't quite understand is when it all comes down, when the shit hits the fan, you get 1/32 of the collateral that you thought you had.
Yeah,
because it gets taken by everybody else. So basically, you get wiped out.
Yeah,
which is why they can't allow defaults.
Yeah, so I think there are people that think about this kind of stuff, and I think you'd want to come up if you really believe that the system shouldn't be able to hold itself up, you're going to do something about it. So the creation of Bitcoin, I think, was kind of around, as Raoul describes it, creating an alternative financial system for when the shit hits the fan, because you have to have an off ramp. You have to have something that's there. Like, if you think about the creation of not the current US dollar, but the Bretton Woods gold-backed dollar, that was, kind of a creation out of total destruction and chaos, and it was hard, right? Like, so if you think about the end of World War II, where everybody had bombed everybody else's productive capacity out to non-existence, except for America, which is geographically far enough away, what do you do with hundreds of millions of people holding pieces of paper with Hitler and Mussolini's face on it? And even the countries that quote won, they were all bankrupt too. So you basically had to erase the system and try to create trust by calling all the leaders to Bretton Woods and saying, okay, you guys, you'll be able to take this piece of paper with with George Washington's face and go up to the Federal Reserve window. And if you got 32 of them, you can trade it in for an ounce of gold. So there's real trust, and that only lasted 28 years. 70 by 72, the system couldn't handle that kind of structure anymore because productivity had shifted into oil. So here we were again in 2007, 6, 7, 8, 9, 10, when it was breaking down, so the predictive, like, oh, we better make an off ramp, was right. And so I think the early Bitcoin was really kind of established as kind of a backstop for the possible theoretical preservation of value if it could gain adoption. And there wasn't really any clarity that it was going to get. And I don't know if you call it mass adoption today or not, but I think no one really knew whether it was going to get any real adoption. And people were trying to get, just anyone to use, like the pizza thing. Anybody willing to take Bitcoin for pizza? Like, just somebody please use it. Let's spread it. Let's, and it kind of caught on, and it was, it's interesting just to see how it's evolved. And the notion of smart contracts, I think, was there academically, but the focus was really on just getting the system to work, getting people over having to read about the Byzantine generals problem and not thinking about it, and lowering the friction to having it somewhat portable in just, like little wallets and easy to use things. It was cool to see it, kind of get used for in markets that were like your kids on Roblox today. They didn't, the people that were using it in gaming already used the functional equivalent of central bank issued fiat currency in game specific currency like Farmville or whatever it might be, right? So it was a natural thing for them to start using an intermediary currency around Magic the Gathering Online, which was, a online game player thing, and Bitcoin kind of took off in there, which is why Mt. Gox became kind of the main places where people would kind of congregate online to buy and sell and trade things. So my theory is it was kind of more of a defensive thing. I would guess that the originators of Bitcoin would be incredibly happily surprised that there's all these other things that are kind of coming out. Ethereum, no one would have predicted Ethereum. Like, that was like crazy that even happened, but it's enjoyed a lot more success, I think, than any of the early Bitcoin people would have ever imagined. And to see the plethora of tokens, I think there's a little bit of kind of, like a scam coin. Like, I think that the whole ICO wave was looked at as kind of like sleazy, but back to your question, I think, it was more, I think, around the worry that the whole financial system was going to collapse and you needed something easier and cheaper to store than gold. So that's my guess.
Yeah.
With no facts. I have no facts to back up any of that.
Hey, listen, talking about on-ramps and off-ramps, let's give some of the folks in the audience an on-ramp to come up and ask a question. Tim, if you can hear me, go ahead with your question.
Ash, that was such a smooth intro. You're like a pro.
Raoul, you should pay me. You should pay me to do it.
I swear, Ash is like, I will never forget, by the way, this is Tim Harris. I will never forget the first episode I saw between Raoul and Ash. And Ash and Raoul says, this is the Swiss Army knife of the space. Guys, I have to tell you, first I'm going to gush for just a minute. Ash, Raoul. I live in Las Vegas. I utterly regret missing the event here in Vegas. Just things were business-wise were crazy, and I just could not get away, and I knew I couldn't commit to it. And my whole thing is, I'd have probably hugged you guys, and I'd probably embarrassed the shit out of you. But number one,
come back next year. We'll definitely do that.
There were lots of hugs, so I wouldn't be embarrassed.
Beautiful. Well, both of you are the reason I'm part of Real Vision, and you're also the reason I'm a pro member of Real Vision and a pro member of crypto. Now, I'll be honest with you guys. I am so far over my head. I just thought, well, if I'm going to spend the money on something and I'm going to go deep, I'm going with you guys. I have been on Twitter now for a couple years. I've been on YouTube for maybe a year, maybe a year and a half. It is the most utterly ridiculous space on planet Earth. But when you find substance and you find value, and all of a sudden, I'm 6 months later, I mean, I can't have this conversation you guys are having with everybody. Maggie Lake, Weston, Elaine, number one, thank you guys. You're awesome. And listening to this conversation, and I forget the gentleman that was just on. I mean, do I understand everything? No, but 6 months of this, all of a sudden you start the glimmer, the comprehension. Okay, I think I understand. I think I got it. Okay. And you get the balance. And now I'll tell you what, Maggie, Raoul, and Ash, you guys come on. I probably listened 3 or 4 times. Even the one you released the other day, Raoul, I had to listen to that 4 or 5 times because I'm not there yet. I'm nowhere even remotely close to your guys' level. But I just want you to know that the reason I'm a Real Vision Pro member is because of you and Ash. And then the value
Tim,
of Maggie. Yes, sir.
I really appreciate that. But you know the dirty truth? None of us know what we're doing.
You know what?
And so,
that's what
so don't be scared of that because we don't.
No.
Bill sounds really smart because he is, but he doesn't know where this is going. I don't know where this is going. All we're trying to do is look at the paths of probabilities and say, listen, based on our knowledge and our experience, we think it might head this way. We don't know. So don't ever feel like you're stupid because you're not. We're all stupid when it comes to everything.
Yeah, it's all an experiment. And actually, I want to just say, preface, I see somebody that popped on, and I just want to preface it with a very strange comment, which is the person that I'm about to name, that Ash and Raoul, I'd love for you to invite up as a speaker. And he'll have to tell me the year, but I think in 2005 or 6, I said, we better be careful because if this works, the CIA might actually kill us. Okay, and that person is Philip Rosedale, and Philip, hit that request. So in 2002 or I can't remember the exact time because he'll clarify this, but we were sitting in front of a bar in San Francisco late at night talking about Second Life, which he had created. And the engagement was there, but it wasn't like super engaged. And we had to talk about creating an economy. And so he created the Linden dollar, and I took the role of Alan Greenspan Gollum. And that was my real introduction into digital currencies. And then, Philip really carried the ball from there. I mean, he was really the only one carrying the whole thing kind of by 2006 or 7. Anchi Chung showed up on the cover of Business.
Quick question, steering away from Bitcoin and blockchain. What? Has anyone heard about Hedera Hashgraph? And it trades as cryptocurrency called HBAR. I'm just curious to know if you have any thoughts on this.
Yes, we actually have heard of Hedera Hashgraph. In fact, we've had Lehman Baird on Real Vision to talk about it. We've had Mance Harmon on Real Vision to talk about it, the two leaders of that project. So yes, absolutely. And thank you for the question. Listen, I just wanted to say to Tim as well, I'm so glad that Raoul got to say it first because it's always good when the boss admits it before I had to. But yeah, we feel the same way. One of the things that makes Real Vision so exciting is it's absolutely a journey. And when I have guests on, I don't know where those conversations are going, and I'm certainly not as smart as they are. But that's the fun, is that we all get to go on this journey together and learn. But Tim, I wanted to give you the opportunity to ask a question, please.
I appreciate that. I know that there's a lot going on. There's a lot of people. There's a lot of people that are really, and it's not so much as, you know, I'm a former business owner. I sold my company in 2017. We did really well, you know. So when I step into the space, and I guess what I'm really after, and I'm really, it's more of a thank you than a question, Ash. And I hope you'll just bear with me just a few seconds and let me get through this. I started this in May, and I'm an IRA, Roth IRA, 401k guy. And I thought, well, in May, there was this AMC, GME, short play, blah, 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 blah going on, you know, whatever. And all I did was start digging into, okay, what really is my IRA and with my Roth IRA? And so as I'm fumbling around with this, guys, in July, there's a Gary Vaynerchuk, who I follow for 3 years, has an interview with Raoul. That was my introduction to Real Vision. And from that point on, I did what he said. He said, hey, join for $1. And then there's Ash. And then I'm listening to Ash. I'm listening to all these great interviews. And then all of a sudden, Maggie Lake shows up. Now Weston, it took me a little bit. He's got a little different style for me to comprehend and kind of connect with. So it took me a little bit longer, which is just personalities. But I'm going to say this. Here's where I'm at. I'm still a Roth IRA. I'm kind of where I like what I hear from Raoul, because he invests and he sits on it and he doesn't sell it. That's where I'm at. So in the prospectus of this, here's where I'm asking for, and the help that I look for. I hear the markets. I hear the macro. I'm learning the economy. I'm learning the economics. I'm learning the macroeconomics. And it's obviously from Raoul being in this for 30 years, Ash, whatever the other folks have been into for the years you've been into it, and the backgrounds of banking and stuff. I'm coming from a business background, but a very simple kind of a Dave Ramsey kind of a, you know, invest 15% and an IRA of 12%. I'm like so over that, because I'm trying to make the double, triple amounts, not over a year, but over the next 10 years. So I'm heavy into XRP. I'm heavy into HBAR. I've got a little bit of Bitcoin. I've got one XRP, and I've got a smattering of other things. And I'm done with the noise. I have deleted 98% of YouTube, 80% of Twitter, and I'm down to these two platforms. And the majority.
Tim, can I ask a question?
Yes, sir. Fire away.
Why do you have, when we've got a whole space that's going up 100x, why the total belief that XBAR is the only bet you should take? Now, that's not to take away from it. You know, it's a very interesting project. But why handicap yourself with the risk that you've chosen a chain that doesn't get scale? That's what I don't. That's what I don't understand.
I apologize. You're specifically talking about XRP,
HBAR.
I guess looking into the deep dive now. And normally I do not divulge my position, but let's just say I've got 10,000 of those.
Yeah.
And maybe that's not a strong position. It's strong to me. Maybe it's not. But if you ask me what is my number one position, it's XRP. My numbers, there's some other ones that I'm on to. To answer your question, I guess because some of the people I'm listening to are maybe strong in that and the validations or the information they bring, but this is where the value of Real Vision kind of brings back. And this is kind of the things that, like, guys, you know, here it is. XRP, HBAR, AMC, GME, you know, and there's a smattering of others, Crow, a few others, and I'm on both sides of stocks and crypto. And I'm looking for that evaluation of having a nice portfolio And those are the things that I'm really trying to comprehend. So I'm looking for help, but I also want to say at the same time, I want to make sure that I say an extremely well and seriously grateful thank you to the value you guys have brought to my life, period. To myself and my wife of 36 years, thank you. So, and Ash, by the way, I've posted a few pictures on your Twitter thing showing you where I'm sitting in my backyard. So it's,
I know, it looks absolutely gorgeous.
That's where I'm at.
Perfect at sunset. And listen, Tim, hopefully we're going to see you in Las Vegas next year.
Thank you.
I also wanted to pull in Tom, who's been the most patient man on Twitter Spaces tonight. He's had a question to ask for about 20 minutes. Tom, I don't know if you can hear me, but if you can, please go ahead with your question. And thank you again, Tim. We really do appreciate that. And it's great to have this opportunity to talk to not just folks on Twitter Spaces, but our viewers and our subscribers at Real Vision.
Ash, thank you very much. I appreciate the time. I know I didn't have a very solid question, but really what I really wanted to do is I want to just put gratitude out there and let you guys know that we're listening. We appreciate you. I know I'm way over my head in my subscription, but you know what? To me, I know in the next 5 years, I'll be much further along and much more informed on a broader scale than I would be if I was just staying in YouTube. So to all the folks on here, Elaine, and I don't know if Maggie's still on there in Weston, but Ash, Raoul.
I think Tim might have just gotten muted, but if you can still hear me, Tim, I just want to say thank you, and not just from me, but really from all of us at Real Vision. We really do appreciate your kind words and really enjoy being on the journey with you.
Thank you.
Tom, thank you again. Tom, if you can hear me, go ahead with your question.
Wow, I didn't realize I had been put to a speaker. Is it possible, can we let Philip go? I'm really interested in what they might have to say about Half-Life, or Second Life, sorry. Is that possible?
I'm sorry, you wanted to ask Bill Ty that question? You broke up a little bit there, or Philip?
I was asking, could we let Philip go? I don't know what's going on.
Oh yeah, there we go. Audio. Great, Philip Rosedale. I didn't realize you were up. Philip.
Hi there.
Hi, Philip. Welcome.
Thank you. Thanks for having me up.
It's great to have you. Go ahead.
Oh, well, I think I was just going to follow on to what Bill was setting up and corroborate that. It is true that, I started Second Life. I started the company in 1999, and we launched in 2003. And as Bill was saying, we were really getting interested in the virtual economy in 2004, 5, 6, and 2006 was when Second Life got really big. And yeah, as Bill was saying, we used to sit a lot, and I got a lot of great thoughts from Bill. As Bill said, he was our Fed chair for a while in there, kind of helping me think through the management of an economy that did not have a fixed money supply like Bitcoin or Ethereum do, but instead had a more complicated thing that was, I think, somewhere in between the traditional central banking process of making currency or changing interest rates and the blockchain process of not really not ever or only algorithmically changing the money supply. So we actually did add to the money supply. But anyway, as Bill had said, it was an exciting time, and one of the perspectives that I know we both shared, was that the kind of birth years of cryptocurrency were likely to be, fraught with peril. I don't know, Bill, whether we were more afraid of criminals killing everyone or governments killing everyone. What do you remember?
Yes. Well, I remember both. Well, I didn't think so much about the criminal stuff. I was worried more about the government. I remember when you had a meeting with Milton Friedman, I was like, all right, this might actually get us to a place where we're like kind of legitimate enough that no one's going to bother us, or bother you really, because I was kind of real just in background. But yeah, it was just such an interesting time. And Philip kind of invented, well, not invented, but Second Life had kind of universal basic income. It was one of the first places, and the things that were happening in that environment were just fun to see. Like like there were Ponzi schemes and all these little banks that got set up, and everything that you would see happen in years instant replay later with the Bitcoin and the ICO thing. They all happened in Second Life years before. It was crazy to see.
Given the group that we have here, one of the questions that are just, kind of observations I would put out there, Bill, is that the thing that we ultimately did and still do with Second Life was rather interesting. And as I said before, is quite different than either cryptocurrency or, fiat central banking, which was we mint new currency and then sell it transparently with an open order book so people know exactly what the money supply is from day to day on the open currency exchange market at the prevailing market rate, with the goal of just minting enough additional currency to hold the price against the dollar and the euro constant as productivity increases in the world. And that's, as Bill knows, that's what we've done successfully since 2005. And the Linden dollar to dollar market price has stayed within about a 3% band or something on a day-to-day basis, and has stayed right about at the same price, 250 to 1, over the 20 years since then. So there's so many great cryptocurrency thinkers here. At some point, I'm fascinated to know, what do you think? What do you all think about that kind of a mechanism? Minting new currency and selling it on the open market, because it is, in addition to the basic income work we did, it is a kind of a fair partitioning, because the currency is being essentially purchased by all incremental traders on the market.
Yeah.
Raoul, I'm kind of curious to hear your thoughts. Go ahead, please.
No, I don't really have a strong view. I just think what you've done is amazing. I think you were a total trailblazer, and the concepts of universal basic income, universal basic equity, currency within communities is astonishing. And I have no idea how you managed to have the foresight to do it. So hats off to you.
Thank you.
Really interesting. We're coming up on almost the 2-hour mark here. I know that's hard to believe, but I wanted to try and get in a couple more questions. I don't know if you can stay for a few more minutes, Raoul, but I'd love to get in some more questions from the audience, because I think that's what makes this so fun. Gaurav, I don't know if you can hear me, but if you can, please go ahead with your question.
Hey, Ash, thank you for letting me ask the question. First of all, it's very pleasant to hear all of you, and very good afternoon from all the way to Sydney. Like, while I was hearing you guys, I was also vacuuming my room because it was a big mess and I had to clear all the stuff up. Now, coming to the question, my question is to Raoul. First of all, Raoul, you are my macro newsletter. Like, if I have contradiction in my head when it comes to what is happening on a macro level, I try to find where Raoul is, where is he be talking, like try to see the whole video, try to re-see it, and try to make sense of what is happening. In terms of that, as just coming back to what we were discussing earlier, so this is a delayed question, so my apologies for that. But in regards to the NFT, when you, Elaine, you mentioned a very specific part of the use case for NFT. Now, that being said, what my question is right now, I personally, in my head, I believe there is a reset requirement for NFTs application that is much required. Like the growth rate, as you guys mentioned about the two laws, the spread rate, the exponential growth that we are seeing for NFTs. So that is all insane. And that is all well and good. But definitely we need to specify a use case, because right now how media publishes NFT, or like someone purchasing a rock or someone purchasing a CryptoPunk, the first thing that you see is the amount that it is being sold for. So that takes away the retail mindset that, okay, like this is not something that we can get into because it's too expensive or it's too out of our league. So that already loses a few of the people. Now, some of them would stay there in order to find an opportunity to flip something, and they start from the very bottom. Out of that, only 10% to 5% actually, are able to understand that game. By the time they reach to the top of the level, again, it becomes too expensive pawn to even have a competition. But then again, right now, these are just artifacts or something emotional attachment to them personally. Who are
my darling, I'm going to jump in here to answer this question. Ash, can I take this?
Yeah, go ahead, please.
Sorry, I didn't grab your name, darling. I don't really understand Twitter Space etiquette, so I'm just going to take on this chat like a phone conversation. What was your name again?
My name is Gaurav, but I have started to market myself as the brand, like my Think Big. Just like Real Vision, I have Think Big. Yeah.
Well, Happy Friday to you. You know, with NFTs, I swear to God, it is so noisy. It's like the space where it's just too much and you punish yourself. You're like, oh, wait, I clicked on that page. It was only a couple of ETH. I could have got in. But it's like you cannot punish yourself for just visiting a page and wanting to get in every single project. That's not the right way to do it. So number one, what I suggest is definitely take your time. And the C word, community. Find what actually talks to you first. And I genuinely think, right, the early people in crypto adoption know what crypto and blockchain technology is doing. So your morals, your values, your ethics. And that's when the real value is going to come in. Say, for example, for me, I spoke to a young lady. Her project is called Women Rise. When we had her on Real Vision, her project wasn't even sold out. It's 0.0 ETH that you could have minted her stuff for. But the thing is, I have worked for a lady called Christiane Amanpour, one of the most renowned female journalists in the world, right? And it was in my DNA for fighting for girls' education, for closing that gender disparity gap. And so her project just naturally spoke to me. And that's when I'm like, oh, you know what? I'm going to look further and into this project. Lo and behold, this project is actually still under 1 ETH. But this week, or the past month alone, that project that I've been keeping an eye on is she's partnered up with Ledger. So Ledger struggles to teach people. Trust me, I've got a Ledger, a couple of them, of course. And when I started using them, it was like using the world's shittest Tamagotchi with nothing like pictures married to it. Oh, sorry, I'm on my first glass of wine right now. Total description.
Elaine, really great points about community, and I think you're so right about how we all learn.
Yeah, so
I'd like to add.
Let me just finish my point though. It's just take your time with it. That's my ultimate number one NFT when I start to look around. Take your time and pick a project that meets your value the most. All right, boys, take it away.
So as part of the question of this was, okay, if this is an egalitarian, community-led project, why the fuck is Bored Ape Yacht Club trading at the price it is, or CryptoPunks? It's basically an exclusive golf club membership. And I have an issue with that personally. I don't have an issue with it has value. I have an issue that the ethos of the space is broader than that. And this is particularly why I am strongly in favor of social tokens as the future. And I know most people don't even know what I'm talking about when I talk about it, but I know it's coming because I'm working on it. And the reality is the ape token is going to be worth a ton more than the entire Bored Ape kind of PFP project, because the community can be larger and more inclusive. And I think that is a really important point.
Yeah, an incredibly important and controversial point. And it is really interesting to see these communities. And obviously the early adopters in these communities have realized some pretty tremendous gains. And it's really interesting to see where this is going. I wanted to pull in Bill Tai and On-Chain again. I'm curious, as guys who run communities like this, what are your thoughts? I mean, obviously it's this sort of weird kind of almost trade-off or balancing act between accessibility and the fact that people are having massive value accumulation as the price rises. How do you guys think about that? And how do you think about those trade-offs?
Yeah, and that's a great question. I'll go first. Bill, you can follow. First, On-Chain Monkey, our collection, we gave it away for free because we wanted to build, community, grassroots, and, bring in people who are people who want to support us and share our values. So our community says RISE all the time, RISE, and those are our values: respect, integrity, sustainability, and experimentation. And over time, right, our price has been rising, and it becomes so. I think the first stage is what projects like CryptoPunks and Bored Apes have reached, which is they are a community of whales, right? And that is fine for an early market. But they have to, build that economy, the economy that, Bill, Raoul, and you were talking about earlier. where it's a whole ecosystem of people. It's not just community of whales, and so the ape token can bring that. And similarly for our project, we have something down the road to address that. And right now So that's my short take. Bill, you want to take it?
Yeah. I'll build on your points, Danny, and what Raoul mentioned about kind of the collection. The NFTs themselves are very valuable in Bored Ape for sure, but the token economy is more, right? So it's kind of like you have the nodes and you have the economy that the nodes participate in, and the economies can be incredibly robust. Right. And you have that in the real world, too. Right. You have different countries that have the same population base, but some have GDPs that are insane and others are kind of duds, even though they have the same number of people. And so it's kind of a question of what's the framework that you set, what's the value system you set so that there's consistency of behavior across the community members. What are the rule sets and the kind of the onboarding, the sources and sinks of capital that the members of a community can use and in these transactions to grow an economy. And I think in our case with the On-Chain Monkey community, it's for those of you on the line that don't know the community already, the concept of currency, either in the old days backed by gold bars, shifted to barrels of oil. What we wanted to try to do was bring it back down to a human level where, when you, and if any of you on this call do a favor for somebody else and generate a little bit of good karma, that's stored value. So we wanted to see, can we unlock that human behavior of taking good karma, encapsulating it and making it, kind of somewhat fungible across members that believe and can unlock value amongst a group of people. So over the course of time, and back to Danny's point about we gave it away for free. If you think about the launch of any IPO, if you overprice your IPO and all the people that were excited about it, like buy in at the top and then it goes down, everybody sells and all they remember is that company sucked, even if the company's financials came back later. So we wanted to just let people continually, be making money on it too, combine good with making money. And sure enough, everyone, like I think, Danny, what was the stat? 100% of people that have held our token have made money. Is that there was a?
So there's a site that ranks these across all the NFT collections, and we're the number one on there for the percentage of trades, the last 100 trades that are profitable for people.
Yeah, so maybe we are underpriced, but you know what? Everybody loves the community, and they're there for a reason. And I think we're going to introduce it. When Raoul, you asked, what we are. Ash, you asked what we want to do to build that other thing. So we've got the nodes; they're consistent in value. We've got good onboard, offboard ramps for transactions, and now we're going to construct the kind of the fabric for how we take all that good karma, the community power, and turn it into something. And one of the models that I've just been fascinated by is YGG, which was built on top of Axie Infinity and some other economies, where it's effectively a DAO of DAOs where community members can kind of raise their hand, a couple can join a little collective, and they pool their money to buy other NFTs to allow other members to enter the community. So it's basically a collateralized lending operation where it's peer-to-peer and a group can kind of put together a little package. And
this is Yield Guild Games for those who may not know.
Yes, Yield Guild Games. So as I look at that behavior and I think, wow, it's very cool. And that's kind of how societies worked a long time ago. Like families and friends of family, your friends would just pool capital to help each other. So we're going to kind of do a DAO of DAOs that is not just to collateralize lending for little pools of NFTs, but it's kind of like anybody can fund anything. If you want to fund a new Web3 startup that you think is going to be worth $100 billion someday, raise your hand and let the market decide, come with you or not. If you want to fund a charity and just give it away, let's see who in the community wants to join that with you. Or if you want to do an open source project or something else, it's a very basic behavior to pool with friends of similar values to fund projects that you like. So I think that's how we want to migrate our community from just the value of the PFP as a show of a membership of a community to a gateway to an economic activity that is productive and accretive in value to all of the other members in all of the DAOs if it continues to grow.
Hey, Bill, let me ask you this.
Bill,
How do you think about risk
Ash,
in this
if
space?
I may.
Just real quick, I'm sorry, I was asking Bill a question. Bill, how do you think about risk in your communities? I know obviously this is very early. The entire space, I think it's fair to say, is highly speculative. How do you think about risk?
You mean for people generating a DAO and trying to get their friends to do something within our community, or which part of it?
Just in the most general sense, how do you think about risk in this new space? How do you think about what some of the potential things that can go wrong are, and how do you control for them?
Well, so I think obviously risk. So if it's financial risk, of course, all assets can go up and down, and the independent, like the macro waves of pricing of risk assets is going to carry everybody a little bit with it, no matter what. But I think that the tighter the bonding is of community members around a set of values, as opposed to the speculative, I bought it because I thought it'd go up, just because they want to make money. The more you have the hot money that just was there to make money, the more volatility there's going to be. So part of our ethos in the very beginning was, you know what? I don't care if it's like massively big in the beginning or not. Let's be very careful in the curation of the community. And, then Elaine Lee talked about, like everybody's talked about, is community, community, community. How do you build a consistent fabric of values so that the people that are there for a reason that isn't just to try to flip something, right? That's the last thing we want. We don't want to be like yesterday's last, crappy ICO. We want to be a living, breathing microeconomy that is as pure as we can get to a consistent set of values, so that it just kind of grows, because I think we're all in it for the long term. And if you do it right, and you think about companies, the best companies in the world are actually cults. Right? There's a kind of a value set and ethos across the employee base where everybody the culture is what happens when the boss is not there. And we want our peer-to-peer community to live and breathe and just keep kind of rolling on its own, bringing accretive value in good projects. So to the extent that manages risk, that's the best way to do it if we can do it at that foundational level.
Very interesting. I want you to pull Raoul back into the conversation, because I know that he thinks a great deal about culture and community at Real Vision and more generally. Raoul, what are your thoughts about where some of this may be going?
I think that community is the new business model. I don't think people yet understand that if you don't have a community, you're dead in the water in this new world. So community becomes the driver. And the reason being, from a business level, is you have a direct relationship with your consumer or your member or your network member in this case. And that throws out middlemen. People become your marketing engine. If you treat the community well as a business, and if the community treat each other well, it grows and it flourishes. This is an entirely new concept. We've seen in music, fashion, and cultural things where a band explodes because of word of mouth, but nobody had network participation in that. It was just pride. When you've got economic participation and pride, it's kind of exponential squared. So I can't overestimate how powerful this is and how big this is. I was this weekend over in Utah at a very exclusive kind of behind closed doors event, and the world's biggest CEOs of every media company, all sorts of incredible people were there, and they all get it. The light bulb moment has started to go off, including there were some of the heads of the biggest Web2 media companies on earth and social networks on earth. And they're like, we know it's coming. We understand. Now, the narrative is far behind. The narrative is Web 2 bad, Web 3 good. Web 2 gets the change. There's a lot of smart people there. They understand that their business model is dying. There is no surprise that Zuckerberg, who's a very smart guy, saw it as fast as possible and entirely changed his business model around it. People think that he's going to create walled gardens. But I can assure you from every conversation I've had with anybody at Meta is they understand that that is not the way. What they want to do is create as much community value as possible by tools, applications, experiences that the community flourishes. If you see the S-curve moment that Meta is going through, i.e. the share prices collapse because network growth of the existing network use, which is social media, is falling as people become more distrusting, they've moved to different networks. It's either going to fail or they have made an incredibly brave, massive bet on the future. And we're all potentially, rightly or wrongly, stuck in a narrative of Meta bad because they will just try and capture everything. I'm not sure that they are that stupid. There are a lot of incredibly smart people there who understand what this is about. Much like Apple understand the metaverse and have been working on AR to an astonishing extent. I mean, again, Meta, let's go back to that. Before even anybody talked about the metaverse, had 10,000 people working on VR for 5 years. They are so far ahead of anybody in this space. Now, I'm not saying that they're good or bad. All I'm saying is that the whole world is pivoting around this concept of community that Web3 drives. And it is a wholesale change of business. The other thing I've been trying to explain to people is this level community is essentially the same as brand. But when you connect, so let's say Adidas has a great brand. Fantastic. You connect all of the nodes of Adidas, i.e. the people who love Adidas, and let them do things together, you've created more value. So traditionally in the stack of ownership of a company, you have equity and you have debt. You now have token. And token is turning brand and community from an intangible on the balance sheet to a tangible. That is extra GDP that did not exist. That is how big this is.
Yeah. Incredibly fascinating moment that we find ourselves at here and are fortunate enough to get to be part of this conversation. I wanted to see if we could maybe pull in one or two more very quick questions. Let's see. Peter.
Is this the world's longest Twitter Spaces? I mean, I'm 4.5 glasses in now, and it's great.
Raoul, critical question. What are you drinking?
I started with a few glasses of Bollinger Rosé champagne, because I like champagne. And then I am now on rum. So rum on the rocks. Because it's Friday night, my wife's out, so why not?
And you're in the Caribbean, man, so why not?
I'm in the Caribbean, exactly.
Let's go to Peter. Peter, if you can hear me, please go ahead with your question. Looks like you may be muted, Peter.
Sorry, I was still muted by the host. First off, huge fan of Real Vision, consume a ton of the content. Thanks for everything you guys are doing. If this has already been brought up, then we can just move on. But did you guys see that Yuga Labs, which owns Bored Ape Yacht Club and other assets, acquired CryptoPunks and Meebits from Larva Labs today? Has that been discussed?
We did. We hit that in hour 1 of 3, actually.
Okay, apologies. Move on to the next one. It's fascinating.
But just to give you that, just to because there's a bunch of new people joined.
Yeah.
Is I think it's incredibly interesting to see a Web3 company, and Yuga is a company, but with an amazing community, which is Bored Ape Yacht Club, realize that owning different communities that are distributed and can take their own lives in their own hands, but putting them together is a modern media company writ large. I think it's amazing what's going on. Whether it works, fails, who the hell knows? All I know is this is a very, very interesting moment in time.
Yeah. By the way, Peter brings up a good question when we go on for 3 hours here. Folks are coming in who didn't hear the earlier part of the conversation, and probably we need to hit some of these breaking news points twice, because it really is obviously a big story and one that we're going to be following closely at Real Vision. I also wanted to get the mic real quick to Ray. Ray, if you can hear me, go ahead and unmute and ask your question, please. Okay, we'll get back to Ray in just 1 second. How about Dylan? Dylan, can you hear me?
I can. Thank you guys for having me. And I just wanted to thank the whole Real Vision team. I actually work at Delphi. So, Raoul, I know you're close with Kevin, and I loved your interview with Piers. So next time you're in New York, I'd love to get a drink with you guys. But I just wanted to kind of talk about, we've just started talking about NFTs and community and what it means for the future. And I struggle with the fact that I feel like NFTs were a huge turning point to bring more people into the space, right? It was no longer DeFi. It was no longer this complex stuff.
Right.
Culture investments was something that people could get behind. But now I think we're also at this point where we've kind of belabored the fact that NFT equals picture or art or community token or whatever. And I feel like we need to make some sort of effort to educate people that the technology behind NFTs, to me, is what's so revolutionary. Like when I talk about this kind of stuff, I mean, like, you could turn deeds to a house into NFTs, right? And now you have full history of everything that's ever happened to that house, sales, etc., right? You could turn passports and driver's license into NFTs, which are, you can't fake them. They're trackable. Now, I know that it kind of goes against the ethos of decentralization and all that stuff, but like even using NFTs in the sense of a centralized world, like I see a perfect opportunity. I know this will never ever happen because the US government does not want transparency, but imagine a world where the US government created a centralized blockchain and every registered voter had an NFT associated with them. And come election time, they cast their votes, and you can accurately determine the election in a matter of, a couple hours? No more spending money on polls and estimating, the different votes in certain counties. It just seems like there are so many things that NFTs can do outside of just culture and cultural investments and things of the like. And I just was wondering what your thoughts are on that type of technology or NFT technology usage, and then how we can shift, it's the whole, like I said, I've prefaced all this by saying NFTs were fantastic to get people into the space. It was the friendly thing that got them in, but now I feel like there's this bias to thinking that everything that's an NFT is just a picture, or
Dylan, I think you're 100% right. I'm not actually interested in PFP as much as I'm interested in two things that NFTs do. One is everything digital goes to zero in cost. And blockchain changed that, so you can now create digital scarcity. Right? That's needed in our world. If not, everybody just loses money in a deflationary world. So that, I think, is very important. I think the other fact about NFTs that you're alluding to is that because you could put a specific thing, because it's a one of one, anything can go on a blockchain. So therefore, whether it's property, identity, all of those things is actually much bigger than PFPs or digital art. They just happen to be the thing that went first because they captured people's attention. But I think what you're saying is absolutely right, And when we look back in 10 years' time, NFTs themselves, when I first heard the concept of tokenization back in maybe 2000, so probably when I first heard of Bitcoin, I thought, well, okay, all securities go online, all derivatives go online. As soon as I heard of smart contracts, which was about 2014, 15, I thought, well, that's every derivative goes online. Then it's every insurance contract, and then it's every single contract. And most things in life are a contract. And if that is the case, then this is simply bigger than almost anybody yet understands. Because everything that we do, turning up to a concert is a contract. Going to a store is a contract. Buying a house is a contract. Owning a house is a contract. All of these things. So I think you're right, Dylan. I think we barely started in the understanding of how big this is. And I've always held the view, why I got into this space in the first place, is I thought recorded ownership was the single most important thing that I'd seen, because in this world, we don't have it. And the more the world gets digitized, the harder it is to maintain value. All of this changes everything. And the traceability and ownership is just tantamount to a total revolution.
Totally, I agree, and thanks for your color on that. And just to take it a step further, like if you think about, let's think about like a housing market in a certain town, right? If you start putting all data, think of like CoStar as it is right now, right? It has all that data. If you were to put that on a blockchain, it would just make the entire market, I think, hyper efficient.
Yeah, I don't know if you remember, Dylan, back in the 2008 financial crisis, there was a system called MERS, I believe, MERS, which was like the back end system for managing title for houses. And it was an absolute nightmare. No one could figure out who owned what. So to your point, huge opportunities. We've been talking about that on Real Vision. I think very much the beginning of the curve with NFTs in terms of applications, in terms of where the technology is going to go. I just want to grab one more question real quick because we're about to run out of time here, but I wanted to pull in one other person who's been waiting. And thank you so much for your question, Dylan. Really
sure. And thank you guys for hosting this space. I really appreciate it.
Great. Well, hopefully we'll talk to you on Real Vision sometime soon.
Yeah, sounds good.
Awesome. I want to just bring real quick HGTP, who's aboard. Hear me, HG. Jump in real quick. We're running out of time, but we've got time for one more quick question.
Hi, Ash. Hi, Raoul. Huge fans of Real Vision, and sorry for my voice. I'm sick as a dog, so I'm grateful that you have me up here. Thank you. I think the one challenge I have, and I'm an NFT guy as well as a crypto guy, the one challenge I have with crypto in particular is that people seem to confuse the market cap of a cryptocurrency with the fundamentals. People look at an inflated market cap and think, oh my God, it must have the best fundamentals in the whole space. And I think that's dangerous for a lot of retail investors that get in and see a total scam company or project. I'm not going to name any names that just don't work. They don't work. A lot of these projects are projects that aren't real companies. And I think they do a fantastic job of siloing themselves within the cryptocurrency world, but do a poor job at bringing in and leveraging their tech to actually add demonstrable value to businesses, to governments, to enterprises, to emerging companies. And I think about the future of this space. And to Dylan's point, Dylan brought up a great point. If you put it on a blockchain, then it'll make everything better. I disagree. Most blockchains don't work. They're all garbage, most of them, just about. And the fees are astronomically high. So I guess my point is, when we think about the fundamentals with the market cap of a crypto, do you, Ash and Raoul, does that worry you when people see, a $50 billion market cap that doesn't even have smart contract functionality? That's my first question.
It's a great question.
I can directly answer this because I built a model that we talked about on the daily briefing and talked about earlier on this call. The model is I can pretty much exactly predict what the price should be of the current network based on the volume of transactions multiplied by the number of active addresses. So we will see many projects that have an inflated price that don't have high volumes, and volumes are not in number of transactions, it's actually in value of transactions. The tested volume, it doesn't make a difference. It only matters for ETH because you burn, and matters for Luna that you burn. So for a network to really have adoption, it needs to have both value of transactions being high and the number of active participants. What you find with the networks that you're talking about is they have a restricted supply to start with, and then they have a high number of wallet addresses, i.e. they've marketed well. And those look good, but because they don't have high volume in terms of value, dollar value or Bitcoin value or whatever denominator you want to use, they fail. So people just need to understand what is the driver of price and market cap. And once you understand those things, you understand how to navigate the space better. So regardless of what you or I or anyone in this call thinks about XRP exactly fits the network model. So its market cap is exactly priced where it should be versus its value of the transactions and the number of active addresses. So for example, if the Ripple case is settled, then the probability is that Coinbase and others relist it, and therefore the volume of transactions increases, even if the active addresses remains the same, and the value of the network will go up. So I think it's a really important understanding of how to think about this space. The issue is early stage. There's not enough history to be able to map a lot of this out. But that's how I think about it. So yes, of course, there's garbage, but actually almost every single chain I look through that I've got data for is actually fairly valued because the market's actually pretty efficient.
Well, thank you. I just wanted to jump in and say, first, I appreciate that response. Something that I look for in addition to what you just said is real-world applicability.
Yeah.
And I don't see any real-world applicability with anything in the top 10. With the exception of a few things on Ethereum, nothing on Cardano, nothing on Solana.
No, and you might be right. The issue is we don't know. So why Amazon was so difficult as a stock to own and hold is because a bookseller was worth more than every bookseller on earth added together. Didn't make any sense because we didn't understand network effects. Once you build a network, you can add value later. So you have to look at the future expected value of the network. That's really hard to do, but actually the market prices this pretty well by using these metrics. So forget now what you think the applications are. If Dylan is right, that everything goes on a blockchain, then you're going to exponentially increase the value of what gets transacted on that blockchain. And in the future and not now. So this is like an option. It's an option on the futures, something I've used a lot. So you can never look at current state to understand future exponential technology. You have to extrapolate some sort of future based on the growth of the network. Hopefully that helps.
Yeah,
I just wanted to say thank you, HGTP, especially for asking that question. I always appreciate skeptical questions. And, you know, I'm obviously extremely passionate about this technology. But as I was saying earlier, you know, there is risk. And, you know, particularly financial risk for people who invest in things that are very speculative. And I think it is important to point out that we are incredibly early and we don't ultimately know where this is going to be. But the conversations that we're having, I think, are extremely exciting. And that's why we do these things, to figure out what the future might look like. How might network value continue to build? I'm going to give you just one real quick. HTTP, come back up one quick second. I know you raised your hand again. Then we got to run. But I really do appreciate it because we're about to wrap up the space. Go ahead.
Sure. Ash, Raoul, thank you again. Really appreciate it. And everyone listening, thank you so much. I guess I look for, in addition to what Raoul said, applicability in the real world with businesses and governments. You know, when I look at a cryptocurrency like Constellation Network that is actually adopted by the Department of Defense, And not to mention the DoD is a paying customer of Constellation, including many other public companies and enterprises. That's something to really consider with a $350 million market cap. Keep that on your radar, Raoul.
And that may be right. The issue is you nor I knows what Solana may be used for. It could be that the entire voting system or municipalities or organizing government structures gets put on that chain or another chain. The issue is don't look at what's now. You may say Constellation is good. Maybe you're right. The market is saying there's not enough transactions and not enough active addresses. Can that change? Of course it can. And that's the bet that you're taking. You're saying, you know what, whatever the state of that chain is now, I think it's going to be more valuable. And that's exactly what we do in the investment business. And that's right. That's okay.
I love it. I love that you said that. I'm sick of seeing people investing in scams with the $50 billion market cap, thinking they're going to make a 10 or 50 or 1,000x.
The issue is you don't know what's a scam. I don't think any of them are scams. I think there's lots of businesses trying to experiment. Some will work and some won't.
Thank you both for your time. Really appreciate it.
Sometimes in this space, during those experiments, Raoul, the test tubes explode, as we've seen happen.
Absolutely.
Many times before. I want you to go real quick, just to go around the horn to get some final thoughts from Bill, Ty, and On-Chain, and then come back to Raoul for your final thoughts. Bill and On-Chain, if you can hear me, I'm really curious. This has been a great conversation. We really appreciate you guys coming to join us. I think you had incredible things to say. Final thoughts, key takeaways that you'd like to leave us with as we start to wrap this space up.
You know, I just the level of sophistication of the audience of Real Vision is growing exponentially. That's all I have to say. Like if I have to think about the kinds of conversations that we would be having 18 months ago or 2 years ago, I mean, this is it's like night and day. So you're doing a great service for the audience and the entire industry. So thank you.
Thanks, Bill. Really, really appreciate you saying that. On-Chain, go ahead, please.
Yeah, and I agree with Bill. Also, I want to follow up on what Dylan was saying about the technology. You know, blockchain is really interesting because of this new technology. And the technology is very early. Like the ideas that he wanted to do, for example, land title or voting, actually those two things I have experience with. Actually, Bill and I have experience with the land title thing. We tried to do this a couple years ago. But also for voting. So one of my friends is Professor David Dill at Stanford. And he's the world expert on electronic voting and on software verification, or formal verification. And if you talk to him, he'll tell you the dream of doing what Dylan wants to do, which is use your NFT to vote, is actually quite far away. The technology is not there today, so it's going to be exciting when it is there. But we're not there yet. So that was my quick comment.
Hello.
Hello.
Hi.
Ash, are we still here or we lost it?
Oh, yes, we are here. I just wanted to say we are now on, I think, hour 3 of our collective conversation, if you include Real Vision Daily Briefing. And it's been a great one. We've heard some different opinions, some contrasting opinions, some skeptical opinions, great comments from Bill and On-Chain and some of the others. As we come to the conclusion of this Twitter Spaces, final thoughts, key takeaways that you'd like to leave everyone with.
For me, it's just the magic of this. I mean, here I am on a small, hot, salty rock in the middle of fucking nowhere, and we are having a really intelligent, interesting conversation on a Friday night. I've got a glass of wine in my hand, and it's like chatting with friends. This is the value of community. This is the value of Real Vision itself, which I'm incredibly proud of, and not from what we've built, but the community itself. And this is an insight into the future of what we're talking about. The value of community to everybody is astonishing. And I cannot simply believe, I've dropped into one of Bill's Twitter spaces. I've been to a couple here and there. I've never seen 2,000 people on a 2.5 hour conversation before, and everybody fully engaged, and it's magic. So thank you, everyone.
Yeah, absolutely, Raoul. Just to echo that, I'm on a small island in the middle between the Hudson River and the East River called Manhattan. It's about 9:00 on a Friday night here. I'm getting ready to go out in New York City, and I know that I'm not going to have as much fun as I did on this Twitter Spaces.
I'll show you a good time, Ash. Don't worry about it. I'm in the city too.
Raoul, thank you so much for joining us. This has been our first Twitter Spaces together, but I'm fairly certain it's not going to be the last.
Yeah, I need a night that my wife's out and I can spend 3 hours talking. So we'll find we'll find another time. But it's been a lot of fun. Listen, and thank you everybody for joining this. Thanks, Bill. Thanks, Danny. Thanks everybody for being part of this. It's been really cool.
Yeah, thank you so much, especially to people in our Real Vision community. It's been great to get to have this conversation with you. And for people who we've just reached on Spaces, perhaps for the first time tonight, fantastic conversation. Really enjoyed it. And I hope you'll join us again soon. Please, Raoul, Bill, Danny, everyone, enjoy the weekend. And we'll see you again right here on Twitter Spaces soon.